Thanks, Louisa. Well, it's been nearly 35 years since the world first learned of Luke Skywalker and Darth Vader, but our fascination with Jedi Knights, lightsabers, and Wookiees has not faded. More than 1 million people spent about 5.5 million hours over the long holiday weekend playing the new Star Wars: The Old Republic online video game. The game was just released by Electronic Arts on December 20th. Joining us now is Glu Basenese, Chief Investment Strategist at Wall Street Daily. So, Glu, tell me, does this mean that Electronic Arts, the maker of this new video game, is really cashing in? Is this a hot stock?
I wouldn't say that it's a hot stock. I would definitely characterize this as a great launch for them. Like you said, they've pre-sold over 1 million units before the launch, and over 60 gamers logged over 60 million hours over the first weekend in the game. Now, to put that in perspective, that's the equivalent of watching all 6 Star Wars movies over 4 million times. So by all metrics, this is a great early success for Electronic Arts, but I'd argue that this success is already priced into the stock. It's up about 25% year to date already. That compares to a flat market. And if you look from the August lows, the stock's up about 17%. So I think really it's tempting to think about buying shares right now because it's been since about 2000 since Electronic Arts has traded this low. But again, I think that all this success of the Star Wars is already priced into the stock at this point.
Now, Electronic Arts is also facing growing competition from companies like Zynga, a social game maker. How much of a threat is Zynga, and do you see an investment opportunity in Zynga despite its massive market cap at this point?
Yeah, I think right now there's definitely an opportunity in the social and mobile gaming space. If you look at Electronic Arts, a company like Electronic Arts, it has about 20% exposure, 20% of sales from that space, whereas Zynga has 100%. But I wouldn't go anywhere near Zynga at this point. It's a recent IPO. I think it's priced to perfection at about 6 times sales. That's roughly double the price to sales ratio of Activision and almost triple that of Electronic Arts. I would instead look to the small cap space to a company named Glu Mobile. Glu Mobile makes online and mobile games across all platforms for all smartphones and tablet devices. It's carrying no debt, ample cash. It's got a blue chip partner in NVIDIA to develop games on the Google Android platform. There's strong insider ownership. They're releasing a lot of games each year, so I think that's more of an opportunity. And given the increased interest and investment in online and mobile media, I think that the company could be an acquisition candidate down the road.
Lou, I have to ask you about Activision Blizzard. I mean, they're the giant in this space, without a doubt, and they have the biggest competitor to the new Star Wars game. Themselves, they have World of Warcraft. Is there an investment opportunity there? They're certainly #1 in the space.
Absolutely. I think if I'm looking in the large cap space, I would go with Activision before I went with Electronic Arts. Like you mentioned, the World of Warcraft has over 10 million users. It generates about $1 billion in annual sales for Activision alone. So you've got a cash cow right there that can fund a lot of investment in new opportunities. If you look at Activision, it's trading at a much more reasonable valuation as well. On a forward price to earnings ratio basis, it trades at about 13, which is in line with the market. In comparison, Electronic Arts trades at about 17 times forward earnings. So in terms of just the better value, I think Activision definitely qualifies. The company's also got 2 launches coming up in 2012 in Diablo 3 and StarCraft. So you've got an earnings catalyst on the horizon as well. The stock has performed largely in line with the market this year. So I think the stage is set much more for Activision to outperform in 2012 than it is for Electronic Arts.
Lewis, it's Louisa in London. I'm no gamer by any stretch of the imagination. In fact, I just tried Grand Theft Auto yesterday for the first time. My very mild-mannered producer had it. It's a very violent game, I have to say. But apart from that, aside from that, how does the software environment compare to the hardware environment at the moment? Are you seeing the same type of indication or want to increase sales and newness of product in both areas?
Yeah, I think you've got a division. If you look at the November sales data, you saw just the top line was a 0.4% increase. And that's largely because hardware sales and accessory sales are really weak. Hardware was down 9%, accessories were down 34%, but video game sales were actually up 15%. And I think this is a trend that you can expect to continue when the December data and the early months of the year come out as well. You might get a bump in the console sales over because of the holiday season. But after that, I think most of your sales increases are going to come from video game sales, especially given the launch, the successful launch of Star Wars and some of the other games that are in the pipeline.
Well, thank you so much for joining us. Lou Basenese, we'll have to see what happens. And I know those console makers would love it if they started joining the software makers in some of those high growth numbers. Thanks so much for joining us, Lou Basenese, Chief Investment Strategist at Wall Street Daily. Now, coming up, more analysis on the